Good afternoon. Thanks for attending and participating in today's webinar. I'm really very excited about the expert-packed group we have here today, the absolute leading brokers, and Bassard, its claims administrator. And today's webinar is about selecting an E&O carrier. First, we can dispatch with the first issue of, do you need it? The simple answer is yes. You cannot conduct business in this industry without E&O insurance. A single claim would be enough to cause lots of problems. Yesterday, I'm sure most of you that are participating in this webinar saw the special report I sent out on the Monotronics case, and although I'm not going to discuss it today, you saw it was a $8 million judgment against Monotronics, which they might be able to do something with, but right now that's what they're facing, and that's already on an appellate level. So it's a serious problem. I would venture to guess that most of today's listeners do not carry that kind of insurance. And keep in mind, that wasn't even a fire loss. That was a intrusion where there was an allegation of rape. So that's a serious problem. I have a lot of issues about how that case was handled and things like that, but we don't need to get into that right now. So the bottom line is you cannot stay in this industry without E&O insurance. So you have to have it, and the question is, where do you get it and how do you get it? So there's also a pretty simple answer to that. Today you're going to hear from industry experts, and they're experts because they specialize in writing insurance for alarm companies. So they know the issues that arise in that particular type of coverage, and they all are very well versed in issues of not only underwriting, which is, I guess, their main focus, but claims, which I think is an even more important issue for you to consider. The brokers today, as well as others that specialize in this industry, can be found in the Alarm Exchange. TheAlarmExchange.com is a website that you can go to, which is updated anytime there's a new posting. And you do get the daily emails from me, and I do include the Alarm Exchange at the after each of the daily articles. So the brokers that participate or specialize in the alarm industry, they know the underwriting issues. They can help you place the insurance. They can advise you on how premiums are calculated. They can smooth things around if there are loss run issues that you might have. And they are also and this is very important, a source of information in the alarm industry. They're in this industry. This is what they do on a daily basis. So their vast experience in this insurance area is something that is something you can tap into beyond insurance issues. They have lots of different experiences. There are two things that I think you're going to focus on, and you may want to. It's okay with me if you take today's presenters and corner them a bit. How does a carrier calculate premiums? Well, there's usually two ways. One's either off gross revenue. The other is payroll. Does the carrier routinely do audits? I'm not suggesting you should lie to a carrier, but you should know whether you can anticipate hearing from a carrier at the end of a year and to see whether they're going to come in and do an audit. Most important, how does the carrier handle claims? If you have a carrier that screws up the handling of your claims, and I'm sorry to say a lot of them do, that reflects on your loss run. That will affect you next year. Next year when that carrier drops you and you have to look somewhere else, next year when that carrier stops writing this industry and you need to look somewhere else, or if that carrier decides that it's going to recoup for all the unnecessary legal fees it spent and damages that it paid, because even the carrier and the claims department doesn't understand how to handle claims. And I'm almost done. I'm going to turn this over to our experts now. The insurance companies depend upon proper alarm contracts. That's how they keep your premiums down. You get proper contracts from me on the website, alarmcontracts.com. Very often when I do the webinars or some other special occasions, as you all know, we have special deals. There's going to be one today. You have to order the contracts by 4 o'clock. 20% off any contracts, and if you buy the all-in-ones, you get a 50% discount if you buy the alternate version of a form. So if you buy sales, you end up getting the lease for 50% off, and if you buy the lease, you can get the sales for 50% off, and the 50% off is going to come off the already discounted 20% that you're going to get. So you can buy contracts today at a substantial savings. Another discount day is going to be next week's webinar, and then that's going to be it for the foreseeable future. I don't know what the discount will be next week, but this is today till 4 o'clock. Next week won't get any better, that I can promise you. So if you're in need of contracts updating, today's the day. Now, I would like to turn this over to Karen. Can we hook her in? I have my staff here helping me. I'm getting pretty good at this, but not perfectly. So Karen, are you there?
I am, Ken.
Okay, so we're going to now turn over a presentation for Karen Izzo, who is in Illinois, right?
Yes.
Okay, so Karen, they're all yours, and I might add we have a packed house, which I know you can't see, but I can. So everybody, Karen Izzo.
That's great. Good afternoon, everyone. I'm very pleased to participate in this educational webinar for the alarm industry. Some quick background. Our agency was established in 1980 based upon my book of direct security guard and alarm clients, and Izzo Insurance has specialized in providing coverage for the security guard and alarm industry since our agency inception 30 years ago. We have specialty security insurance programs exclusively available through our agency, and while our primary carrier is the Fireman's Fund Group, statements today may not specifically refer to the Fireman's Fund policy, as we have several other companies for those that do not qualify for the Fireman's Fund program. I have licenses in 50 states as well as internationally, and we have a network of over 5,000 retail brokers that place coverage in our exclusive programs for their security clients. And I'm not here today to provide legal advice because you have Ken for that. Can I have the next slide, please? How do you compare coverage when you're selecting your insurance? Checklists are a valuable tool when comparing coverage. We have one on our website for your benefit and have provided the link. An easier way to remember how to find it is just by going to izzoinsurance.com, click on Alarm Companies, and click on General Liability. The checklist refers to policies issued by one specific carrier, but can be used as a great general resource. The next slide, please. While checklists are a good start, a quick review may not reveal coverage gaps. The intent is not for you or your broker to have a list of items to simply check off. It is to focus on coverage and policy forms that require a great deal of attention. With a very limited amount of time in today's webinar, we will review just one of the many checklist points, the blanket additional insured endorsement. I've selected this point because I believe it would be most beneficial for our attendees today, and because this one endorsement results in the highest number of uninsured claims for alarm contractors. Next slide, please. Let's see, we're on slide 4. For coverage to respond in the event of a claim, most blanket additional insured endorsements require a written contract, and provide coverage for ongoing operations. So what does this mean for the alarm contractor? Next slide. Most certificates of insurance for alarm companies are not valid and will not provide coverage in the event of a claim. It's pretty scary, so we need to know why. The written contract requirement. Alarm companies utilize standard alarm contracts. God, I hope you do. And standard alarm companies should not name the client as an additional insured. Written contract is one of the terms most misunderstood by alarm contractors and their clients. A written contract is not your alarm contract. A written contract is a written contract or agreement signed by both parties that require additional insured coverage to be provided. So here's the problem. You need to use your standard alarm contract, or eventually there may be a claim that can put you out of business. So the client agrees to sign your contract, but they say you need to name them as an additional insured. It could be verbal, listed in insurance specifications provided to you, indicated in a sample certificate, or in a letter stating you're required to name someone as an additional insured. None of these are written contract as defined in your policy. So you request the additional insured certificate from your broker. The broker issues the certificate. You provide the certificate to your client. Now there's an event that results in a claim against you and the entity listed as an additional insured on the certificate. The entity named as an additional insured on the certificate tenders defense of the claim to you. You present it to your insurance carrier, and the carrier denies the tender and won't provide defense for the additional insured. Why? There was no written contract or agreement that required you to name the entity as an additional insured. In many cases, there is no contract with the entity requiring you name them as an additional insured at all. It could be a property management firm, and you may be installing an alarm for a tenant in the building. Next slide, please. And if the written contract doesn't create enough pain for you, there is an ongoing operations exclusion. Most additional insured forms do not provide coverage if you are no longer providing service to the entity when the claim is presented. Alarm companies may not be providing service after an occurrence that results in a claim. You may have been fired, or you may have canceled the service because they didn't pay you or you don't want them as a client. Next slide. Typical additional insured verbiage may state, who's an insured is amended to include an additional insured, any person or organization for whom you are performing operations when you and such person or organization have agreed in writing in a contract or agreement that such person or organization be added as an additional insured to your policy. Oh. So what does that mean? The additional insured requirement had to be in the contract, and you utilized your standard alarm contract. And you still have to be working for the additional insured. If they're suing you, you probably are not still providing ongoing operations. Next slide. So what should your blanket additional insured endorsement say? Here's a sample that indicates in A, there's still written contract language. This protects you if you did sign a contract requiring an additional insured and forgot to tell your agent. You still would have coverage. But the most important part is the or in the second point. A certificate of insurance is issued naming such person, organization, or contractor as an additional insured and is on file with the carrier. Why is that important? Your agent simply issues a certificate and provides a copy to the insurance company. You use your standard contract and there's no additional insured requirement in the contract, or the certificate was issued to a third party, such as a property management firm. It doesn't matter if you're still working for the additional insured. No ongoing operations requirement is there for coverage to be valid. On the next slide. I've tried to illustrate just one of the critical endorsements to an alarm policy. There are several essential endorsements critical to the survival of your alarm business. And hopefully we can address some additional items in future webinars. I know Ken, in the beginning of his introduction, asked that we explain pricing and how the policies, how the premium is developed. So very quickly, I had referenced our primary carrier, which is the Fireman's Fund Group. Fireman's Fund Group rates on receipts. They have a tiered rating system, so the higher amount of the receipts, the lower the rates. What the companies have determined is that the claims don't increase exponentially when the number and when the amount of receipts increase. So they are able to provide a lower rate for the higher number of receipts or the higher amount of receipts that you have. They don't charge as part of receipts what you pay for central station monitoring if you're not the central station. So for example, if you're an alarm company and you pay the central station $8 a month, but you're charging your client $24, we just charge for the amount that you're not providing to the central station. So we exclude that portion that you have to pay to them. And for non-alarm operations such as CCTV, access control, they're all rated significantly lower than true alarm ops are. So we ask on the application that you break out non-alarm operations so that they may be rated separately. And I know Ken will have questions, and I hope I can answer questions for the attendees as well.
Before I let you go, Karen, let me ask you this. There's a lot of different carriers out there now that are providing coverage in the alarm industry. What does the financial strength or an AM Best rating mean to someone looking for insurance?
The financial strength or AM Best rating is critical. And people say, oh, it doesn't matter if it's an admitted carrier or it does matter if it's a non-admitted or surplus lines carrier. The financial strength tells you that the company hopefully will be there to pay in the event of a claim when you need them to respond. The Fireman's Fund Group is rated A15 by AM Best, and they have $5 billion in revenues. They're owned by Allianz. Allianz has $106 billion with a B in revenues, and last year had $9.3 billion in operating profit.
I think they get the idea. Let me ask you this. I know you have a lot of insureds that you are their broker, but what about a lot of companies that need to give their business to their brother-in-law or other relative or best friend? Are they able to work through you?
Absolutely. We have, as I said in the beginning, a network of over 5,000 brokers that have placed coverage with us. What we've done is we've worked to create policy forms for agents that do not specialize in the security industry. Most brokers aren't only insuring one class of business, and I know you have a couple with you today that are, but countrywide they're insuring gas stations and car washes and trucking companies. And so when they're reviewing, even when a person that's not familiar with this industry reviews a checklist and he looks at additional insured, okay, fine, there's a blanket additional insured. And that was just one of the points that we talked about today. But we have to assume that insuring alarm companies isn't all they do. And so we have worked with, like I said, the Fireman's Fund Group to create a policy that will fill the gaps that those brokers that don't specialize in this industry even know exist.
Thanks, Karen. I want to thank you for participating. And the only other thing I want to say is make sure you use, if you have a broker, if they're not on the alarm exchange, make sure they're using somebody on the alarm exchange. You should be using a broker that knows what they're doing. This next broker has been involved in the alarm industry for a real long time, and it seems like maybe since she's 10 years old, maybe? Probably not. It seems like that. But Alice Jacqueline is our next presenter. And Alice, since we're running a little behind time, I'll save the jokes and turn this over to you.
Thanks, Ken. I appreciate that. Okay, well, I'd like to thank you for the opportunity today and thank the fellow presenters as well as the attendees. I know there's going to be a lot of information here. Some of it is detailed, some of it is, just general across the board. What I presented and I prepared to present today is a 4-step process. It's a little bit of a different format than Karen just used. Hers was very detailed on the blanket additional insured endorsement. The 4-step process that I prepared is it's simplified. Obviously, we can get into great detail, but today, for the interest of time, we're going to go through and hit on some bullet points on what you need to look for. Just to let you know, I have insured in the industry for about 23 years exclusively, so I don't write anybody who insures gas stations or car washes or anything else unless they're in the alarm and security industry. Let's see here. Step 1. Well, first you need to decide who you're going to work with. My highest recommendation is that you go to an agent that knows your industry, that knows your business. You can obtain referrals from your central station, legal counsel, friendly competitors. It's important that you work with somebody who knows your business, and this industry is very specialized. It's important to be able to easily communicate with your agent and feel confident in their ability to properly handle your company's insurance needs. If your agent clearly understands your business, you select an agent, make sure that you know who that they're going to approach for a quote. Make sure that they have a strong relationship with that underwriter because, there is comfort in numbers. Knowing that your agent deals with a specific underwriter, carrier in the industry, has an ongoing day-to-day relationship with them, should give you very much a comfort level. And last but not least, I have to add one in here, is you want to make sure that they are properly licensed. It's important that you don't get through a quoting process and find out that they can't place your business, and then you have issues with the carrier and everything else. So licensing is very important. And the other thing is you want to make sure that they can handle all of your commercial insurance needs. You don't want to have to go to one agent for your general liability, one agent for your auto or workers' compensation. It's nice to be able to go to one agent, be able to get one certificate for your customers, and then we'll go on from there. Can I have the next slide, please? Thank you. Step 2, information needed to obtain a quote. Many companies rely on their agents to not only tell them it's their renewal time, but to get everything put together. A lot of things are handled last minute, and you don't want to deal with your insurance at the 11th hour. You should have somebody in your office who can take care of maybe the normal processes in getting the information gathered. You're going to have an application that you need to complete. Some carriers will deal with specialty agents and they only have one, or there's several applications, but you want to make sure you disclose all of your operations and give a clear estimate on your exposures. Make sure that you give payroll and gross revenue because they may be obtaining multiple quotes for you and they could have a different underwriting basis. Supply the contract copies. Dealer agreements, whether you're a central station or a dealer, there should be an agreement in place. You want to provide the end user agreements as well as your subcontractor agreements if you use subs for installation or service. The next item is 90-day currently valued loss history. You need to get currently dated loss history every year, and I suggest that you have a normal process to obtain that on your own. You're going to work in advance and use your leverage. Using your leverage is bundling your coverages together. They may not want to write workers' compensation by itself, but they will write it if they, put together auto and property along with that. Along with that is obtaining concurrent expiration dates, not dealing with your insurance expiring. Each month is a different policy. Then you could have some gaps in coverage if you have an umbrella issue and the auto is under the umbrella and it's a different date. The implementing an internal insurance process is you controlling your insurance, not relying on somebody else. So you want to make sure that you're gathering the information, you request the loss history, you have the application so you know what is being presented for your company. And then you want to make sure it's on a calendar. So obtaining concurrent expiration dates, bundling your coverages, and having the process controlled in your office rather than somebody else's is important. Next slide, please. Step 3 is review proposals and details. After you get all that information together and you submit it, you're going to get at least one proposal, if not several, back. And there are quite a few things that you want to look for. And if your policy in the alarm industry, we have an occurrence, most of the time is an occurrence-based policy, not claims-made. Occurrence is the preferred form. And errors and omissions is an endorsement onto a commercial general liability policy in almost every case. This is different for our industry, and this is the preferred way to have it written. You look at your limits. It'll sometimes be split out 1/2/2. You have your each occurrence limit, the most they'll pay out on any one claim, and your general aggregate, the most they'll pay out for any number of claims during that 12-month policy period. And then, of course, the third one is products and completed operations, and sometimes it has a separate limit and sometimes it doesn't. It's important to look. In the industry, we insure for the catastrophe. We have a severity issue, not a frequency issue. So you want to make sure that your each occurrence limit is there, as well as your general aggregate, normally a $1 million, $2 million. Deductible, this is your out-of-pocket expense in the event of a claim. Look to see if it's per occurrence or per claimant. Per claimant, you could have multiple claimants, and if you have $5,000 deductible, you have one occurrence that results in 10 claimants. That's a pretty heavy hit for an alarm company to take. Errors and omissions we talked about. Ken touched on it. You have to have it. If you're in the alarm industry, you must have E&O, and you must use good contracts. Then we go down the list, per project aggregate. Many of the policies these days offer a per project aggregate. That is something that's going to be required if you deal with construction projects, developers, things of that nature. And if you don't have it, you should ask for it and ask how much it costs to add it onto your policy. Defense costs are normally in addition to your limit. They are paid in addition to. They do not deplete your limitation on your policy. You want to check and make sure that that's the case. And next, it seems like it would not be important, but the next is a class code description. This class code description, your application becomes part of your policy. The class code description defines what you actually do. You want to make sure that that class code description has a clear definition of the services you provide, because in the event that it doesn't, you could have a coverage issue in the event of a claim. Next slide, please. Continued step 3. All policies, almost every policy that's issued is an annual policy. It's 12 months. And then at the end of the policy, you do the renewal, and then you have an audit. Almost every carrier audits. Sometimes it's a physical audit. Sometimes it's voluntary. You should know in advance and be able to provide that information, whether it's physical or voluntary. 25% minimum premium. That means no matter what, if you get the policy, you bind it, and a month later you cancel the policy, the company automatically earns 25%. A lot of the companies have a minimum and deposit. This is going to be more on the surplus lines carriers that are non-admitted. If you have a $2,000 a year policy premium and you don't do the numbers that actually that you projected, they're not going to give you any premium back at the end of the year. That's important to know when you're balancing out your costs. Independent contractors. If you use independent contractors, it's very important to look at your policy and see what the requirements are of the insurance carrier for you to use them. Are they covered under your policy? You need to get a certificate of insurance? Chances are that's the case. You need to have proof of insurance from them. The specific exclusions, you have a residential exclusion and a contract warranty. In my personal opinion, those are the two that are targeted in our industry. You need to look in very carefully and see what your policy, if they have them. The residential exclusion, you may or may not do residential developments. It may not fit the description. It may not be something to worry about, but you need to know if it's on there. The contract warranty, if it's on there, I suggest that you shop your insurance, because what it basically says is if you don't have a contract and you have a claim, you have no coverage. Additional insured endorsements, primary non-contributory language. Karen definitely touched on those. You want to make sure that they're blanketed on your policy and have a clear understanding on how they work. And that's in addition, the waiver of subrogation is an endorsement that should be on your policy on a blanket basis, because if you're contractually obligated to provide it, it's already on there and you don't have to go through the underwriting process. Step 4, selecting an insurance carrier. We touched briefly on the rating. The rating is their financial ability to cover claims. Basically tells you there's an outside company called AM Best that rates insurance companies. It tells you, and they're reviewed quite frequently to make sure that they're in good standing. My personal recommendation, I would not insure or write a policy with a company that is not A-rated. They need to have a secure rating with AM Best, and that should give you some comfort whether they're admitted or not. The second point is longevity and experience in the industry. You want to be able to establish a relationship with a carrier and stay there. Hopping around from carrier to carrier every year is not recommended, and insuring with somebody who doesn't, number one, doesn't understand your industry, or two, isn't in it for the long term. You could have issues that arise 5 years later with a claim. You want to make sure that that carrier is still around. Admitted versus non. Really, Karen touched on it, and I'll just go ahead and confirm. I agree with her. It doesn't really matter if the carrier is admitted or non-admitted from the standpoint of you want to make sure that they have enough money, that they're financially able to cover the claims, and that they're going to be there. If they're non-admitted, you're going to have taxes and fees on top of your policy premium. Other than that, I would say that the main focus should be on the financial stability of the carrier. The underwriting appetite and the requirements of the carriers are very different. You have some carriers that will only insure, standard Bergen fire. You use your contract every time. If you don't have a contract, you have no coverage. If you do any PERS or medical alarms, they won't insure you. And there's some companies that are quite flexible with their underwriting guidelines. That's something that you want to know in advance.
Alice, you got 60 seconds. Let's go.
Then make sure that you pick who you want to go with and understand that they know what they're doing. Go to my next slide. Well, you're going to skip over the rating basis for First Mercury. There you go. They base it on gross revenue. If you don't hit that estimated revenue, they don't return premium. If you go over it, you have your rate determined in advance, so you pay the extra amount at audit. Next slide. We have over 2 decades, I personally do, in insuring in the alarm industry. We're licensed in all 50 states. We can handle all of your commercial insurance needs. And we have several carriers that we deal with, and we can offer all types of insurance for all security and alarm-related operations.
Alice, let me break in and ask you. I have 2 questions for you. One is, what about PERS? If you could just quickly say, what do you have a particular carrier that might be best for a PERS operation? PERS is personal emergency response, medical alert.
Yes, the leading insurance provider for the PERS industry is going to be First Mercury.
Oh,
they have insured them for years, and they are the ones that aren't afraid of underwriting the risk.
I won't ask you how they handle claims. That would be way too long of an issue.
We don't have time for that today.
No, we don't. Let me ask you this. If a company has trade names, the name of the company is XYZ Inc., but it happens to also trade as Joe's Burglar Alarm Company and Joe's Fire Alarm Company or Joe's CCTV Company, should it name each one of those trade names in the policy? And would that
Absolutely.
It wouldn't affect its premium either because it's one entity, right?
It's one legal entity. It doesn't matter how many trade names or DBA names that you have. They should all be listed if you want to have defense triggered in the event of a loss.
Right. Okay. Well, here's Alice's information. and I want to thank Alice for participating today. It was a great presentation, as was Karen's. And I do need to move on now, and our next presenter almost doesn't need an introduction. Like me, he is a legend in his own mind. And Bart, are you there?
I am here.
Okay, you're up.
Great. Thanks, Ken. My name is Bart Didden. Once in a while could be seen in some of the posts in Ken's daily article, which I think is a great service for the industry, and I want to thank you for including me. There's a lot of information that Karen and Alice, Karen I haven't had the pleasure of meeting yet. Alice I've known for many years, and there's a lot of great information in there, and I'm going to run through the slides, but I have just a couple other points that I want to throw in. And one thing about AM Best and the ratings. I mean, Security America is a B++ company. It's one notch away from an A rating. Each year that we've been rated, they come in once a year, and I also have quarterly phone calls. I'm the liaison person to AM Best. We maintain a stable outlook, which is a very favorable approach. But when Ken started the call today, and we mentioned the Monotronics decision, I will say that I think the next week's webinar, where I'll be participating again, you'll see more of the Bart Didden type opinion than you will today. But I just want to say to the people on the call today, why you have insurance. Some states require insurance coverage. Insurance is not to make your customers whole. The insurance is to protect your asset and protect your company. That's why you have insurance. So when Ken was talking about the Monotronics decision and said, if you have the right kind of coverage, it isn't about the right kind of coverage, because all of us today are selling and telling you that you need errors and omissions and that type of standard alarm coverages. It's about the amount of coverage. Alice talked about 1 million, 2 million aggregate. That's what we all start out with. Security America goes up to 6 million. So what you need to do, and there's some other legal opinions out there when people ask how much insurance should I buy everything that you can afford to buy. So about Security America, we started in 2003. It's an offshoot and owned by the Electronic Security Association, formerly the MBFAA, formerly that I used to be president of, and its policyholders. But it's not a mutual company. No one policyholder has any liability, by the actions of another one. And when we talked about AM Best before, Security America is reinsured by Lloyd's of London. We have a syndicate there of 6 insurance companies that come together and sell us reinsurance, and that's another one of my responsibilities. I go across the pond each year to maintain the relationships with them, and each year every time we renegotiate the reinsurance, our rates actually get lower. We've never used our reinsurance policy since our inception, and knock on wood, it's because, and as we move into a couple of the next slide, it's because we only deal with alarm companies, and we understand and we know what it is that you do every day, and because I'm doing the same thing. And so we'll kind of get there in a second. So because we're not a publicly traded company, we don't have the pressure of shareholders and so on, our pricing is stable. We're not taking money, profits, and making risky investments to try and make more money for shareholders. Our whole focus is about a long-term, ongoing program. Industry expertise, we understand all the related risks. Our board of directors consists almost entirely of industry professionals, and some insurance industry professionals that help us manage the program. Quality coverage forms, no hidden surprises, no claims made, no medical exclusions, water exclusions, etc. And we support the industry. And how do we do that? It's by participating, and this is where our underwriting, because Ken's questions in the beginning were premiums, are for us based off of revenue, and we also look at the the payroll numbers. And yes, we do we do a self-audit, and we do retain the right to send in an audit company if you got to be truthful. If you're not truthful, you can always end up getting denied on a claim because it turns into a fraud. So, but how we keep this level and stable platform is because all of our members are of the program are association members, and everybody learns from best practices and networking and association training programs, as well as like the professional programs we interact with, like Interlogic, First Alert, IQ, PSA, and other qualified programs that all give you discounts. Because what's the theme in all of these is training, knowledge, professionalism. And it's those companies that learn and understand what's going on, like with the Monotronics decision that Ken talked about today, how they keep their risk low. So we support the association, the chapters, articles in Newsline, emails. Let's go next. Here's just one of us at the ESX program in Nashville, and then the next slide, and some other winter industry sponsorships that we do. But what I want to say here is that the great thing about Security America is the long-term view that we are us. And it all just melds together when I talk to someone about an insurance claim and a defense, and I'm able to talk to our insureds and understand what's going on with the claim, what the claim is about, and our reinsurers are actually shocked at the amount of our loss runs in comparison to the published data of the industry as a whole. And I will tell you that the requirement that everybody keeps hitting you over the head with about using standardized or generally accepted contract forms like you can get at alarmcontracts.com.
Bart, thanks for that plug. I just want to cut in for a second. I want to, because I have some questions for you that are in line with what you talked about.
I just want to say what is essential is that recently we had a claim, and both the Central Station and the alarm company were represented by Sarge. The Central Station and the alarm company had Ken Kirschenbaum contracts, and it's something that we'll probably talk about next week. But in the end, not only did the alarm company and the Central Station get out of the claim, we also went back to Hartford because the subscriber had the responsibility to indemnify us, and Sarge Company got about $45,000 paid back to it for our costs to defend the Central Station and the alarm company under the terms of the contract.
You're getting into next week. I might add.
It was a teaser. So let's go.
I might as well tell you that we won a decision today on a SARG defense case that we're handling, a multi-million-dollar fire case, and the complaint was dismissed against the alarm company. We just got
Thank you very much.
Just got it. But let me ask you this. First, I want to point out that the only way to get into SARG at the moment, I believe, is to be a member of National. Is that correct?
Or PSA.
Okay. And I just want, now, why is SARG different? And I think you've already touched on this. It's because it's owned and operated by alarm dealers. It's owned and operated by the alarm industry as opposed to the insurance industry.
That's correct.
Right. Now,
you know, and the other thing I want to say is, you know, while SARG is only underwriting errors and omissions and general liability, when you talk to our underwriters, you can get a quote for auto, you can get a quote for workman's comp, because if you look at your certificates now, you'll see that each one of those coverages is written by a different insuring company, but even though you're only dealing with one agent, you're not dealing with just one carrier.
Does SARG give discounts? I know they do. So what discounts do you give to people, companies that want to get insurance through SARG?
Well, there's the what brings our rates in low to begin with is that being an industry member of these of the associations is the training and all the other stuff and that I talked about earlier, but also the other professional programs that are out there, like the Honeywell programs, the Interlogic programs. They all create discounts against our rates because there again they all have training and professional business development and things like that that, you know, help support your company.
Well, Bart, I want to thank you for participating today. I look forward to next week on alarm defense, where I'm going to have a lot more to say, and I know you will also. So thanks again very much. Now we're going to turn to another industry legend, a guy that's been around since the 1940s. Is that right, Rick? Has it been that long? Rick Gumbar, are you there? Bart, I think you put Rick to sleep because he's not responding, and it's his turn to do a presentation. Well, let's see where we go with Rick. Rick, feel free to jump in whenever you're ready. Rick's out in California, and I'm going to show you his webinar PowerPoint presentation that he sent us anyway, because he went to the trouble of preparing it, and I don't know why he's not on this call. My staff's going to try and reach him now. So here's his first slide, and I know some of you are going to start dropping off now, and I'm sorry to hear that. But Rick is very involved as a broker out in California, and I'm going to show you his second slide because he takes great pride in how he assists you when you have claims that you have to handle. And here's a slide that I know he's particularly proud of. He's was instrumental in talking claimants out of pursuing their claims, and he's got a list here of a bunch of those claims that he's managed to prevent lawsuits from getting started. It's defending the cases, by the way, that is a real drain on you. I know you, all you guys, you spend a lot of time selecting a carrier, thinking about the premium, and then having to pay it. Of course, no one likes to pay for insurance. But when the claim comes, that's really when you have to wake up and understand why you got this insurance and how grateful you are that you do have it. And hopefully you've got the right insurance. Because one of the worst things you want to happen is have your insurance in place, or think you do, you get a claim, and all of a sudden you're hit with a reservation of rights letter that tells you, well, we're going to defend you, but we're not going to pay the claim because we have all kinds of reasons that we don't think we should be paying the claim, and you're really basically on stuck. You don't want that. You also don't want a denial of coverage letter which says, thanks for sending us the claim, but we're not going to cover you. You're on your own. Those are things that you don't want to get. It's not why you bought the insurance, and that's really something that causes you a problem. So unless Rick jumps on board here, and it looks like he's not, I'm going to, he is? Oh, okay. Wait till I tell him he lost half his time. By the way, we have a couple of more webinars planned, and I've been advertising them on my daily emails. If you have any ideas for webinars, let us know, and we'll put together the experts and we'll present them. I went a little crazy in the last month, knocking out 8 of these webinars, but hopefully we'll continue to do them, maybe with a little less frequency. But let me know if you have any ideas, or you want to present a webinar, and we will sponsor it for you. And we have excellent participation and attendance at every webinar we've done so far, including today. So we hope to hear from you on that. Rick, are you on yet? Where is he? Well, we're going to give him another minute. You know, while we're waiting for Rick to get on, I think I'm going to unmute Karen and Alice in case they have anything they want to add. Alice, you're now unmuted, so don't cough into the mic. And
well, I appreciate that.
Yeah. So, do you have anything you want to add or respond to? Because we do have a couple. We have about 6 minutes. I want to give our listeners their money's worth, even though we didn't charge them. Karen,
yeah,
you are now also unmuted. I don't know if you're there. Keep in mind, those that I've unmuted, that every sneeze, laugh, everybody hears it. So.
Absolutely.
Alice, you have anything that you want to respond to in terms of what Bart said, or
actually, no, Bart. You know, I think the webinar went very well today, because you have you got kind of a got to tap into everything that on a global basis, or on a bird's eye view of what's needed, and got some specific details, and the claims handling. After hearing you guys talk back and forth and reading the information on Monotronics that you sent over yesterday, I think I'm going to participate in your webinar and hear what everybody else has to say as far as defending the claims goes. I think everybody did a good job. Are the people who are attending the webinar, can they ask questions?
They can write questions in. And by the way, at the moment, while Rick is still trying to figure out how to join us, I have Bart unmuted, Karen and Kelly Izzo unmuted, in case anyone wants to chime in and say anything. Rick, are you on yet?
I'm trying. Are you there?
Oh, Rick, you are on, finally.
Wow. Well, it said it's telling me it's listen only, and I can listen to myself.
Well, everyone can now hear you, and I will slowly unmute the others, but allow you to keep going.
Okay.
So we used up some of your time, but since you're last in line, I guess as long as you need, as long as everyone's interested in staying on, we're fine. I've gone through some of your slides. I'm going to go back to the beginning if you like. And,
okay. Well,
and you're up, Rick. Go ahead.
Okay, so I'm going to take a little different approach this morning, and I'm going to give a brief history of the alarm industry as it pertains to general liability and errors and omissions insurance. So there's not going to be a lot for you to write down or look at. I'm going to talk more about the concept of what we do as an agency and how the industry got here. When I say the industry, I mean the insurance industry and the alarm industry. As a brief history of my experience, in 1981, I was one of the 3 founding fathers of the Los Angeles County Burglar and Fire Alarm Association. At that time, I wasn't in the insurance industry. I was in the advertising and marketing industry. And among other things, I was marketing an advertising tool sponsored and endorsed by the Federal Emergency Management Agency out of Washington, D.C., and I was marketing it to the alarm industry. To make a long story short, I helped put together the Los Angeles Alarm Association, sat on the executive board of directors as the secretary of the association. And most importantly, at least for this discussion, I also chaired both the membership committee and the insurance committee. In chairing the insurance committee, I soon discovered that the insurance industry had a very, very, very poor history in insuring alarm dealers. Over the years, carriers, large ones, Industrial Indemnity, even Fireman's Fund, had come into the industry with their guns blazing and saying they're going to take over the industry and insure all alarm dealers. And within a year or two, after suffering what we call a shock loss, which is a large loss for a fire or loss of life or a major burglary, the carriers got together and said, well, we're not going to do this. Who needs to insure this type of an industry? It's just too volatile. So in my discovery, what I found in working with the industry and also with the alarm industry, that insurance companies were paying claims for losses that had nothing to do with the alarm system failing or not. And the issue, of course, was the contracts. Without a contract, you have a very difficult time arguing, and that's when you would see the large awards happen. So as insurance committee chairman of the Alarm Association, I helped put together what is now known as a standard alarm company contract. And we required in our underwriting to participate in our program alarm dealers to use subscriber contracts. And to make a long story short, it worked. We used it as a membership tool to build the Alarm Association for Los Angeles, and I can tell you within 6 months we grew from zero, or from inception, to about 200 members throughout Los Angeles. I then did this for the San Diego Alarm Association and the Orange County Alarm Association, which are south of Los Angeles, and then I did this all for Northern California and the alarm associations there. The program was always marketed through alarm associations. That was my expertise. Within a couple of years, because of the success of the underwriting and the success of our contracts, I began doing it for the National Burglar and Fire Alarm Association nationwide. So the model that we used to make our program successful was using proper contracts, and most importantly, arguing the contracts. And what I discovered early on was when one of my clients would get a letter from an insurance carrier, or I'm sorry, from like an attorney or an insurance company that said to the alarm dealer, that in essence said, you put a security system in our client's liquor store and they were burglarized and here's what the losses were and pay up or we'll sue you. I would take that letter and forward it on to the carrier because that was my obligation to do so. And I soon discovered that what the carrier would do would be open a claim, they'd collect a deductible, they'd hire legal counsel, they'd do an investigation, and they'd spend about $25,000 investigating the claim. When I knew that all they really had to do was dissuade the attorney representing the subscriber and tell them that there was no basis for a lawsuit. So if you would go to the next page, please. This is a letter that very briefly, if you can go to the next slide. Hello, are you hearing me? Okay, there we go, good. This is a letter that accompanies what we call our claims to fame, and real briefly, here's what it says. A famous football coach once said, if you can do it, then it ain't bragging. When it comes to handling claims for alarm dealers, we stand alone. In fact, over the past 10 years alone, we have handled 84 demand attempts against our insureds, totaling $19,431,815, and we won every one of them. That means 84 of our insureds did not have to suffer through a lengthy and humiliating lawsuit, pay their deductible, sit through numerous depositions, testify in court, or incur a rate increase on their insurance. So we're not bragging when we talk about our success in handling claims. It's what we do. So the next page, if you would go to the next slide, this is a detail of some of the 84 claims that we have handled in the last 11 years. The largest one, and kind of my favorite, is the one next to the last in the bottom. It's a $3 million claim. This was a jewelry heist. The insurance company representing the jewelry store ended up paying $2.7 million on the claim, and they went to subrogate against the alarm dealer for $3 million. And we argued against the insurance company, that being Fireman's Fund, and we made it go away for the $250 limitation of liability. So when my agency talks about insurance, all of us in the seminar today, I believe, do it right. We know what we're doing. We have experience at this. To me, it's not so much coverage shopping as it is service shopping. And let me explain the difference, because we all do business differently. You do as alarm dealers or central station operators, you do your business differently, and as insurance professionals, we all do business differently. So by way of example, the first thing we do that I don't think most insurance agencies do is we talk to our clients when they want insurance. We don't send out an application and say fill it out and send it back and we'll send you a quote. We do a risk management survey of the client or potential client on the phone, and we do our own underwriting in our office. In addition to that, for our existing clients, we take the application. Again, we don't send it out and ask people to fill it out and send it back. Within 90 days of the renewal, we contact by phone, and I can tell you I do this personally. All of our clients, we take the application, we do a risk management survey, and certainly we look at their payroll and their revenue to make a comparison as to whether we should write this under payroll or whether we should write it under revenue. The second thing is we issue certificates ourselves. We read contracts. If you send us a contract, we will read it, and we do the search based on that contract. If the coverage is in discrepancy with the contract, we contact the client and we let them know the difference, and we get that negotiated properly. With regard to audits, we audit. We don't send out auditors, though. What we do is we ask our clients for a P&L statement. Almost every alarm dealer, certainly 90% of them, use QuickBooks, so it's a pretty simple process. You send us your P&L, we validate it when it gets here. If there's any issues on it, we call and crunch the numbers with you, and if there's money owed, we'll bill it. If there's money due back to you, we can get a refund. That's another thing that's unique with us. A lot of carriers won't give refunds. Our agreement with the carrier is that we will. Also, of course, our claims to fame. I don't think anybody else, I don't know anybody else that does what we do in the way we handle claims. Again, in the last 11 years, we've handled 84 claims and over nearly $20 million. What we sell is we sell service, and I think it's a big difference between us and what a normal agent would do. Certainly not to say that the others on the phone here don't. As far as the care,
let me just interject. I agree with you that you're a little more active, a lot more active in the claims process. So when did you? I think you might have covered this. When did you first start deflecting claims for alarm dealers?
We've been doing this, or I've been doing this for 33 years. The second year that I was doing this, when I discovered what the insurance company was doing and how they were making a mess of it, I started doing it on my own. And I told the insurance company what I would do when I would get a demand letter is I would send that demand letter to them along with a cover letter that said, I'm going to do an investigation on this. Unless you hear anything further, consider the matter resolved. And then what I do is I contact the attorney. I do an investigation first with the alarm dealer and find out exactly what happened. They cut the telephone wires, or it wasn't a supervised system, or whatever. And then I put a detail together in letter form to the attorney saying, this is what happened. We're sorry for the loss. This is what the contract says. I'll cite 5 or 6 cases or whatever that I can imagine after doing this all these years. I've got drawers full of cases here. I'll cite 4 or 5 cases that mirror the circumstances of that loss, and I'll explain to the attorney if they're going to give it to any insurance carrier to be made whole, they give it to the carrier that's insuring their client, not the one that put in the alarm system.
Now let me just clarify something for the listeners.
Okay.
I want them to understand what advantage there is in getting rid of a claim with the broker, in this case Rick, getting rid of a claim before it hits the carrier. The advantage is if Rick is handling a claim, or one of the other brokers would handle a claim, there's no expense to the alarm company. If Rick or the alarm company were to simply send the claim to the carrier, the minute the carrier opens the file, that's when the expense process starts towards your deductible. Also, it hits your loss run history. Would that be accurate, Rick?
That's accurate, and it's one of the things. We have our own program with a company called Philadelphia. Philadelphia is open to almost all agents other than California, where we write about 80% of the alarm dealers here.
Wouldn't you suggest that brokers from other parts of the country still call you and go through you?
Yes, we can write this nationwide, but I don't write through brokers. I write only direct with alarm dealers. I won't go through a broker because brokers don't handle customers the way we do. So I want to be hands-on. What other brokers will do that aren't familiar with the alarm industry is they'll send out an application and they'll tell the guy to fill it out and send it back, and then they send it to me, and that's not what I call service. What I call service is sitting down with the alarm dealer, going through the application step by step, finding out exactly what they're doing, how they're doing it, what type of systems they install, how they pay their installers. Are they subcontractors? Are they employees? Who does their monitoring? Do they have a contract with the central station? Is the central going to require them to name them on the policy as an additional insured? And there's a whole host of questions that go through the underwriting process that we do here. And then once we are done with that, we then ship it to the carrier, explaining to the carrier exactly what's going on, what we need, and we, in essence, assemble the policy ourselves. And then our agreement with the carrier is they will give us the endorsements that we need. Another thing that unique with our carrier, because we have such a large book, is if one of our clients suffers a loss, most carriers are going to increase your deductible or increase your rate, or flat out deny renewing the coverage. With my book of business, our agreement with the carrier is they won't do that. I've convinced the carrier they're in the business of paying claims, and if an alarm dealer has an accident or makes a mistake or whatever, then that's what they're in the business of doing, is paying that claim. That's not to say that if there's a history of claims that I would want to keep that type of an alarm dealer in my book of business. I wouldn't. But if a client is with us and he's had a claim, he's not going to see a rate increase the following year. And I have a history of that, of 31 years of doing it that way.
Well, I got a tough question for you now,
okay.
and only because some wise guy asked it. I would hate it asked of me. Have you ever lost a claim?
I've had 2 claims. I've argued with, out of the 84 that I've done, I've had 2 attorneys contact me after they received the letter, said they didn't believe in the court cases that I cited, said that they were going to file a lawsuit regardless. They did file a lawsuit, and we had both of those cases dismissed in summary judgment. So again,
Rick, I'd like to just add this. Since I'm in New York and you're in California, I have no objection if you continue to practice law. That's fine with me, and handle these claims, although you're not competing with my alarm contracts, I hope.
Quite to the contrary. I use the language in your contract to help deflect these claims. So it's the success of my work is based on limitation of liability and exculpatory clauses in the contracts. Without that, I have no argument.
Rick, now's your chance to look at the screen and promote my contracts.
Well, I think your contracts, in all honesty, speak for themselves. I can tell you that a lot of my clients use your contracts. I can tell you that I have argued your contracts successfully in many of these 84 claims that I've handled, and this nearly $20 million that I've deflected. And it makes it simple when there is a contract. And as you know, Ken, I've known you for over 30 years. You and I have always promoted contracts to our dealers. And when I first started doing this, I can tell you, we got California on the bandwagon of contracts almost immediately. And it filtered its way through immediately to the East Coast and then kind of settled in Central America. But the reality is that the contracts work. They're what alarm dealers use and insurance companies use to argue your position. And incidentally, when you go to sell your alarm company, that's what you're going to be selling, because that's what the buyer's going to want to see.
Well, Rick, I want to thank you for participating today. Your presentation was very informative, and do you have anything else you want to add before we're a little over, but we have managed to retain almost all of the attendees.
Fabulous. No, just that in our next seminar we're going to be talking about more specifically E&O claims and how we handle them in your next webinar, and I'll give more detail on that, and I think alarm dealers will find it very interesting.
And you're going to figure out how to log in, right?
I still haven't figured out what went wrong. Technology.
Okay. All right, everybody, thank you, and thank you, Rick. And everybody, I want to remind you, 4 o'clock today, place your order, get the discount. It won't be available tomorrow. Some other discount might be available next week when we do defense stuff. But today is the day to order these contracts and save a lot of money. Our contract administrator, Eileen, is waiting by the phone. Okay, thanks, everybody, and I hope